Hello there, Simon Jackson from LearnLoads.com here. Are you just starting a business course at college or school, not quite sure exactly what we mean by profit? Well, this video is for you. To give you a bit of an overview, I'm going to show you how profit relates to investment and cash flow. What is profit then? Profit is total revenue minus total costs. Business activity involves costs, expenses, and revenue, which is sales income. Total costs, TC for short, might include expenses such as wages, raw materials, and rent. Total revenue, TR for short, is the price of products multiplied by the number of products sold. Total revenue must exceed total costs to create a profit, which we can call P. If total revenue is less than total costs, the business is making a loss. When total revenue and total costs are exactly the same, this is called break even. Let me give you an example. Binkham and Lulu Pizzas. We talked about this business before in the What is Franchise video. You'll find that on the other playlist. Binkham and Lulu you don't need to worry about that, but you will. Binkham and Lulu started a pizza takeaway not long ago. Last year, their first year in business, their total costs were £100,000. This included wages for the lad that they employ, rent, the cost of pizza ingredient, various other costs. They sold in that first year 24,000 pizzas at an average price of £5. Now pause the video and work out what the profit was for the year. Remember, profit is total revenue minus total costs equals profit. Binkham and Lulu's profit for last year can be worked out fairly quickly like this. If total revenue was £120,000, that's 24,000 pizzas multiplied by £5. So take away £100,000 total costs and you've got £20,000 profit. Now think about this for a minute or two. Is £20,000 likely to be an acceptable level of profit for Binkham and Lulu? Pause the video just for a moment. You might have said yes, this is good considering it's their first year in business, or you might have said unless they have another source of income, they'd be better off getting jobs. If this business is their full-time occupation, in the UK, £20,000 per year between them is not very much. Both points of view are valid. Investment and profit. What is meant by investment? To produce a profit, money has to be invested. Investment involves tying money up. The money that's invested to either start a business or help an existing business grow is known as capital. For instance, Binkham and Lulu would have needed some capital to buy expensive equipment and fittings for their takeaway premises, a big pizza oven, for example. You may be able to think of some businesses that seem to require quite small amounts of capital. Others will require a great deal. However much is invested, the aim is to make that capital grow. This is called making a return on investment. It's generating profit that provides that return on investment. Can a return be guaranteed? No, of course not. When they first opened for business, Binkham and Lulu were very confident about making a profit and a decent return, I expect. But the truth is, nobody can forecast before you start if you will get enough customers or exactly what the cost of running your business will turn out to be. There's no such thing as a guaranteed profitable business idea, whatever anyone might try to tell you. All business investment involves risk. The risk is partly about not making a profit. Cash flow and profit. Later on in your business course, I'm sure you will look at cash flow in a bit more detail. Cash flow basically is the difference between cash flowing into a business and cash flowing out. Now, I don't want to go into too much detail at this stage, but it's worth mentioning that cash flow and profit are two different things. Before we go any further, can I just quickly say, if you want to find out more, have a look at the 2 videos on cash flow in the finance playlist. But anyway, can a profitable business be short of cash? Yeah, because that's a way of looking at our profit and cash, 2 different things. Can a profitable business be short of cash? Yes, it's perfectly possible for a business to be profitable, yeah, total revenue being greater than total income, but desperately short of cash. So think about the house building industry, for example. Builders, or any other kind of building work, builders are usually paid when a job is completed, months after they started building. Before payment is made by their client, the builder has to spend a lot of money on materials, labour and other costs. The builders might face serious cash flow problems if there are several building projects draining the business of cash at the same time. So they might end up profitable, may well at the end of the year be expecting to make a big profit quite reasonably. They've got these contracts, but they're really short of cash. They're having to spend lots of cash on materials, etc. It's also possible for a business to have a lot of cash but not be making very much profit. Can work the other way. So cash flow, profit, 2 different things. However important profit is, the survival of a business depends on having enough cash to keep going. If a business has nothing in its bank account to pay bills, it will ultimately be forced out of business. Hope this video has helped. Please feel free to mooch about the Learn Loads channel and subscribe if you'd like to, using the red button.
Oh, one more thing. Click on this link to find out about Free Book Friday, our great free business book offer. Bye.
Created using Powtoon.